And let's go over to Japan, where Japan's economic growth in the second quarter has been much slower than seen in a stellar preliminary reading. Government data showed the downgrade was widely expected after data used to revise GDP or gross domestic product. These figures showed capital spending in April-June rose at a slower annual pace than the previous quarter. While the disappointment, this data may weaken confidence in the government's economic policies and the business outlook. Analysts still expect economy to sustain a steady recovery as robust global demand underpins exports and a tightening job market improves the prospects for higher wages. Japan's economy, world's third largest, expanded at an annualized rate of 2.5% in April-June quarter, less than initial estimate of annualized 4% growth. And news from global tech space, where Apple, its growth path may not be easy for Apple tech giant as its new iPhone may hit production glitches, and our reports say that Apple can face supply problems when it launches iPhone 8 next week. So new iPhone could face supply shortfalls. Reports are saying this. Apple's iPhone could come next week. The growth path may not be easy for Apple because it could face supply problems. The new Apple could face supply shortfalls, and the reports are coming on that. Apple's iPhone, though, could come next week to different countries in the world. The growth path may not be easy for Apple, the tech giant. And it is coming at a time when there is a demand for festival buying, which is going to go up over the next few months. The new iPhone 8 could face shipping delays following its launch. Apple shares, though, were down 0.4% in US markets yesterday. And let's talk about markets, India and global. Equity benchmarks opened today on a very positive note. Sensex was up by around 70 points and Nifty was also up in the morning trade. If we talk about overall morning trade, Nifty is currently up by 24 points while Sensex is up by 58 points. So markets have opened in green. Yesterday they closed nearly flat with no gains. A number of issues were responsible for that. There are other markets as well in Asia that are trading mixed at this moment. If you look at other Asian markets, Nikkei is down by 87 points and other markets like Straits Times is down by 2.47 points. Hang Seng, though, is up 166 points. And we are joined by our analyst for today morning, Mr. Ashish Andani. Good morning to Mr. Andani. I would like to first of all ask you, how do you see the trade happening on the last day of the week?
Yeah, I expect the trade to be range bound. You know, we are seeing that since last 4-5 days. The market is still waiting for the cues which has to fall in the markets. You know, the political, geopolitical tensions which are surrounding the global economy, these are the riding factor which I think will be responsible for some, sharp or vicious movements. You know, on the other side, the crude price since last 4-5 trading sessions is rising due to the crude, the OPEC is trying to cut the production. So I think that will also, weigh a bit on the markets. I think the market will need a very, very solid reason now to move up from here. You know, I'm talking about both the global and, the domestic markets. Talking about the international markets, most of the markets are in the red as of now as we speak. So I think that the markets will still be in a range bound and the market still, waiting for fresh cues to enter in either a bull or a bear zone going from here.
All right. And Mr. Andani, if we talk about the global markets, how do you see trade happening over there today? What are the big factors to be watched out for as far as global markets are concerned?
You know, if we talk about the global market, the inflation data, which there are talks that the inflation would still be high in the US economy. So I think that will be the guiding factor which is there. Another factor which I mentioned would be the crude oil production. If they, drastically reduce the crude oil production, the prices of the crude oil per se in the global market could rise from here. So I think there will be these will be the guiding factor, and it will be a bit soft for this week and coming week also when we talk about the Asian or European or the US kind of market. So I think it will be a bit soft going from here, because if we talk about the Dow Jones or S&P or Nasdaq future, so both are facing huge resistance, stiff resistance on the upper side. So I think there will be some profit booking and a range bound kind of market for the global markets too.
Also, Mr. Andani, I would like to ask you, gold is again back on gaining certain point. Today it is up around 200 rupees. Day before yesterday it touched record high. So how do you see gold going from here on, and what is the overall outlook about the commodities market?
If you see the gold prices, especially when the geopolitical tension started rising, the gold has started inching, drastically on the upside. And, if the global experts are to be believed, they see the more upside for gold from going from here. So I think the gold will be a very good buy on dips kind of candidate, because talking about international gold, it is hovering around $1,358 per ounce. So I think that 1360, 1365 will be a stiff resistance for gold. So a small profit booking could always be seen as a buying opportunity for gold, because it's a perfect hedge towards the uncertainty in the economy, in the way the things are looking on the global economy. I think the uncertainty will prevail at least for a few months from here. So I think the gold is still intact in the bullish trend, and buy and dips is a good strategy for gold.
All right, thank you, Mr. Andani, for talking to us and getting us all these details and this important perspective. And as we were speaking to our analyst, today the morning trade, if we see Nifty is up by around 18 points and Sensex is also in green, up by around 42 points. That's all we have in this edition of WION Wallet. For more news and updates, stay tuned to WION, and thanks for watching us.